Hello and welcome to our latest infrastructure market update. I'm Annabel, Senior Marketing Manager at Foresight Group, and today I'm joined by Nick Scullion, who is Head of Foresight Capital Management and Lead Fund Manager on the FP Foresight Global Real Infrastructure Fund, which is more simply known as Griff. Thanks for joining me, Nick.
Great to see you, Annabel.
It's definitely nice to see a familiar face. So should we start with talking about the state of infrastructure in the current market? How has infrastructure as an asset class fared over the last few months?
Absolutely. So infrastructure overall has performed very well. Clearly, during February and March, like all asset classes, there was a somewhat of a sell-off, driven by the search for liquidity. But we have seen a very strong recovery from real assets driven by government-backed, index-linked cash flows. So I think it's an encouraging time for the infrastructure in this market, and it's been proven in the last few months.
Great, so that makes sense. So can we just talk about that a bit more? We obviously saw a lot of investors convert their assets to cash. Do you think they're ready to come back to the market? And if so, what are they looking for in that market?
Yeah, we certainly saw the dash for liquidity in February and March. We have seen some investors come back to the markets to participate in the recovery since then. However, we do expect even more investors to start to return to the market. We conduct a proprietary survey at Foresight Group. We rerun it every few months, and what we found this time was that investors are increasingly looking for infrastructure, for its defensive characteristics, for its resilience of income from those real physical assets that we're talking about. So about 10% more than in December 2019 are looking for infrastructure as an asset class.
Wow, that's quite a lot. So Griff's obviously in a good place then.
Yeah, I think Griff is in a really good place from an asset class perspective. I think the focus on sustainable real assets, renewable energy, social assets such as healthcare, hospitals, schools, pharmacies, those types of assets are really well positioned to do well in this environment. I think the defensiveness from having governments as the ultimate counterparty is attractive at this point in the credit cycle, and I think that we are well positioned to give investors the defensiveness and the income that they're looking for.
Obviously, we've got a big focus on sustainability and renewable energy in our funds, and there have been a lot of changes in energy prices recently. So can you explain a bit more about that?
Yes, so the dynamic with energy prices in many markets at the moment is characterized by falling for the next few years at least. What that does is it makes traditional fossil fuel plants more competitive with renewables. However, the good news there is that innovation is happening at a rapid pace. We're seeing innovation across the renewable generation space, across storage, across grid efficiency and management, and electric vehicle automation and so on. However, I think that some of the most compelling investment opportunities sit within some of the more mainstream renewable energy asset classes. So storage, I think, is going through a step change in efficiency at the moment. Wind and solar both going through efficiency projects of their own. We're set to see some of the largest installations of offshore wind this year, which I think is really exciting. And our infrastructure fund is a very way of getting exposure to some of that innovation.
Fantastic. Well, thank you very much for joining me and breaking out of your COVID bubble, and hopefully see you again soon.
Thanks, Annabel.